Are you about to pay far too much tax on your furnished holiday lets when you do your tax return? There are plenty of mistakes that you might be making, or indeed your accountant might be making, that results in excessive amounts of tax being paid. Check out this video as you can save tax by just doing some simple things. Hi everyone, my name is Simon Misiewicz, and in this video I want to share with you why you might be paying far too much tax on your tax return. It is one thing that Optimise Accountants frequently sees from generic accountants and indeed taxpayers when they do their own tax return, that they make assumptions that cost them more tax to pay to HMRC. So let's do the basics and make sure that you reduce your tax liability as much as possible. You might want to take some notes. So let's just go through this first box. We're going to be talking about income. What's the problem with income? Well, the first thing is VAT. Did you know that furnished holiday lets will be considered a business? And if it's considered a business, then, well, hey, you need to be registered for VAT. But many people register for VAT, but then don't know how to pay as little VAT to HMRC as possible. And that's when you can use the flat rate scheme. There are other schemes available as well to furnished holiday let business owners. So make sure that you speak to your accountant, your tax advisor, to get the latest information. The other side to it is using cash or accruals basis. You need to work out, well, if I declare to HMRC on a cash basis, as in you collect the money in, therefore you declare it, are you going to be paying more or less tax than if you use accruals basis? As in, I send an invoice out to the client and then when I get it in, that's fine. But actually I declare when I send the invoice to the client. Which one will you pay more tax on? And for many taxpayers, when they work with an accountant, they don't know which one's been chosen for them. So you could be paying more tax even though you weren't realizing that this is happening. Just out of interest, if you do need some property tax advice, please look at the QR code. That QR code is there for you to use. The link is in the description box as well. But if you're looking for a bookkeeper, again, feel free to use that QR code, and the link will also be in the box below. Loan interest and finance costs. Now this is incredible because when we talk about furnished holiday lets, Section 24 mortgage interest relief cap basically says you cannot offset mortgage interest costs against your tax return. But furnished holiday lets, albeit it's residential in some nature, it is considered to be a trade. And because it's considered to be a trade, it means that you can offset 100% of your finance costs. Now, here's the thing. When we have spoken to some of our clients that come on board with Optimise Accountants, they have realized that their accountant in many years ago haven't been declaring all of the mortgage interest costs. So Section 24 does not apply to furnished holiday lets. The other side to this is finance costs. If you have a property and you have a mortgage, and then you eventually refinance that property, let's say that it's gone up in value or you're doing some extra work to add value to the property. When you refinance that, part of that remortgage finance costs, legal costs as well, can be offset against your tax return, which basically means you reduce tax. But we see far too many people that do not take advantage of that refinance cost against their rental income. And therefore, guess what? Right, pay too much tax. Other property allowable expenses. Now this is an incredible one. If you are going to see your property, you've already bought the property, what costs can you offset if you go and see it? Well, here's the thing. If you are traveling in a car, people know that it's 45 pence per mile, but how many people realistically will log the amount of times that they go to see your property? And therefore they miss out on that pretty much a cheap way to reduce your tax if you do 10,000 miles. And by the way, please don't just say, well, I've done 10,000 miles. You need to show HMRC that you've traveled on certain dates to the property and that for what reason. You might see letting agents. You might go to a networking event. You might go on education courses. All of those travel expenses can be offset against your tax return. And as long as you provide a log, then you can get 45 pence. But you're probably thinking to yourself, why is there 50 pence? Well, like me, you might take your spouse to see the property as well. So you get 45 pence per person plus 5 pence for additional persons that's with you. So it could be 55 pence for 3 people or 60 pence for 4 people, etc., etc. The other cost is hotel costs. So how many times do you go to your property and it's miles away from where you are? And you might just say, well, do you know what, this is far too much travel for one day, so I'll just stay overnight in a hotel. Well, that cost can again be offset, but many accountants will say, no, that's personal use, so you can't offset that. But actually, you're there on business. You're not there for pleasure. You're not going to go see that property just for the heck of it. So that cost can obviously be offset again, but most accountants won't put that through for you. Travel and food. You need food to live, essentially, unless you're going on a water-based diet. That's unlikely. So the food and drinks that you have, as long as it's reasonable, and there are some HMRC rates, by the way, for this, so you can't go overboard, but there are some rates that allows you to put your expenses in, receipts into your accountant for them to offset that against your rental income. So, but all of these costs, typically we see clients that do not offset or tell us about these costs because their previous accountant said it wasn't allowed. Or indeed, they've done their own tax return and just thought, wow, I didn't even realize you could do that. So there you are. Other capital allowances. Now, it's box 12. And what I find fascinating about this, other capital allowances. Basically, if you have a building, you've got wiring, you've got plumbing, you've got all the electrics, the water systems. Did you know that Furnished Holiday Let that you can claim capital allowances and indeed the furniture that you have in that property? Well, if not, you do now. Essentially, you could get up to 35% of the building value. Typically, it's about 30%, but typically between 35% we see our clients get. And what will happen is that a surveyor will come out to the building, look at the value, look at what the building is all about, and put in a survey report in for you. That way, you can then get a report from that company, and then they will give you the tax reducing items. And at 35% of the building value, that's a heck of a lot of tax that you can save. But we see so many clients that do not take up that opportunity. And when people come on board with us at Optimise Accountants, we refer them to our strategic partner to help them save tax through capital allowances.